Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Always enjoy our Fridays together, and it's been an interesting week in the markets.
Bob, the U.S. Central Bankists, the Fed, they say they're worried about inflation. Is inflation a problem right now?
Well, this is really, the problem is the institutional understanding of inflation. The economists and central bankers, and they all consider that inflation is a rise in the consumer price index or a rise in wages, accompanied by rising, commodity prices. And that's inflation. But, there's a different kind of inflation out there, and we've been enjoying it, and that's inflation in financial assets. So here's the way it works, is that then I did all this research decades ago, so that you had the big boom in commodities during the 1970s, inflation in the U.S., CPI inflation got up to about 15%. And then on the previous boom in 1920, it got up to 22% on that then. But then you have that global speculation and commodities blows out and hits hard, and then you shift over to the wonderful world of inflation and financial assets. So there is they used to call it classical economics, and their definition of inflation was an inordinate expansion of credit. And that's the key. So you can have the inordinate expansion of credit against commodities, which we've seen, and then you have the inordinate expansion of credit against the boom in financial assets. So this is where in 1982, and that was the end of the bear market that had started in 1968, the view, I remember we had a slide on that saying that no matter how much the Fed prints, stocks and bonds would outperform commodities. And this was highly controversial at the time, because by then, many money managers had finally figured out that inflation, CPI inflation, was related to the amount of printing that the U.S. the central banks were doing. But indeed, what it is the public decides what the game is going to be. And the latest boom in commodities ran up into 2008. Remember, crude oil up to $147. And then that crashed. Then it set up then the next really big boom in financial assets, and the Fed through the period was saying that pricing power was too weak, and they had a target that you had to get the CPI inflation up to 2%. But if any market historian knows, if you looked at what the Fed was doing in the 1920s, after that huge commodity boom, industry and commerce pricing power was weak. So the Fed was very easy in the 1920s to try and keep prices up, not understanding that the game had changed to financial assets. And then you have that blows out, and then the contraction following a great financial bubbles have been always much more severe with a greater impact than the collapse of a boom in commodities. So here we are the Fed has done exactly what it did during the 1920s, and we have the exact same thing going on, a tremendous inflation in stock and bond prices, from which the collapse can have some profound effects, like a extremely slowing economy and things like that. So this is where now it's important to focus on the character of this market and understand that it is inflation in financial assets. But what you've got here, like a well-known and very highly regarded gold bug on May the 29th says, inflation could soar as the trade war intensifies. So the only thing these guys know is inflation in intangible assets. So, and it's perplexed everybody that the price of gold has come down from, for the last decade. So, but they're still in the same mode that something's going to get inflation in commodities going again, and gold's going to go to 5,000 or whatever. But it becomes a whole lot clearer when one has done one's homework and looked at financial history. And Jim, it's very simple. A huge boom in commodities. That one was, the key one was 1920. And then the more recent one was 2008. And then about a decade later, a huge boom in financial assets blows out and is followed by a contraction. So we'll take a look at our financial assets here. We'll go look at it two ways. One would be the bond market, and the other would be the stock market.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Bob Hoye. Bob, you'll remember the government's solution to rampant inflation in the late 70s, early 80s was bring in price controls, wage and price controls. It didn't work on controlling prices, but they sure kept wages down. And they also removed housing and energy from the index used to calculate inflation. Well, if you take housing and fuel out, no wonder we've had a 2% inflation rate ever since.
The other one they do, Jim, is that they don't include taxes as a cost of living.
Oh,
yeah,
how clever
that's
of
not
them.
in the equation. But at any rate, the policymakers are so messed up because they've got this grand idea that they can manage an economy. And you got, in like the U.S., you have more than 300 million people in an economy. And in Canada, 32 million or something.
36.
Economy. 36. So you've got this notion that there is a separate, discrete national economy that they can manage. So even then, in Canada, you've got the audacity to think that a committee in Ottawa can manage the economy of Canada as if it was separate from the United States. So it's sort of a collective madness out there. But at any rate, on the bond market, on long-dated treasuries and Government of Canada bonds, the action has been really hot, certainly since about November, when the stock market then had a severe correction. So then what happened is the hot money rolled into the long bonds market, and you've had a terrific rally, which we thought could run into about June. And the other thing is that for the last few weeks, the technicals on it, the action is so hot that our technical models are saying, hey, this is the end of it, kind of thing. So the other part is that we had these readings in the summer of 2016, and that, of course, was when in Europe, bonds had got down to, virtually zero interest rates, and in some bonds were trading at a negative interest rate, which is pretty absurd. So our work in 2016 was that technically you could analyze the U.S. market because it wasn't as rigged as the European market, and that a turn in the U.S. market would hit the European market, which it did. And then, as I said, this latest party in long bonds started in November as the stock markets were stalling out. So we now have an important high in bond prices, an important low for the yields, and these headings down will be a negative for the stock market. So this is one form of financial asset inflation in long-dated government bonds, the high-grade market. And then within that, too, you also have very good action in low-grade bonds, junk bonds, high yield, that sort of stuff. And that peaked earlier in the year, maybe in March. So then the high-risk stuff, the dangerous stuff, has become very confident and is now fully at risk. So our advice on high-grade bonds is to shorten term, get yourself defensive, and the advice on low-grade stuff, which would also include some preferred shares, which are really popular in Canada, would reduce exposure to risk there as well.
We'll have more with Bob Hoye right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, research done by Ted Dixon at Inc. Research indicates Canada is kind of what I put as the free tradiest country in the developed world. It's got the fewest tariffs now on goods and services compared to everybody else. And the Toronto Exchange actually has been outperforming the U.S. stock market this year. Is that good news for Canada?
Yeah, it has been good news for Canada, although I'm surprised that it's ranked as free as it is, because for certain industries, it's not. You cannot export gas, fuel, crude oil, or natural gas. There's limitations against that. You cannot transport Canadian oil or gas produced in Alberta and Saskatchewan to the eastern provinces, and you can't. There's been constraint upon expanding oil pipeline through BC. But I think this is ending action on this movement. It's so self-destructive, I can't believe it. But anyways, the theme is sort of paradoxical, because the pipeline to the eastern provinces, like Ontario and Quebec, an oil pipeline would reduce seriously the number of oil tankers on the pristine waters of the Gulf of St. Lawrence. But they don't want that pipeline because they're content to have these tankers sailing back and forth on the St. Lawrence River. But here on the west coast, they're against the pipeline because it would then prompt more tankers on the pristine waters of the Pacific. So they're crazy, and we've had a oil pipeline through BC since 1951. There's been no major disasters. So it's a lot of this anti-energy and anti-pipeline stuff, of course, is funded by Soros and the Rockefellers, and they just have this idea that you can have a one-world government and everybody's subservient to it, and they're acting in the best interest of all of the people in the world. And this is an old political movement, been on for since the early 1900s, where authoritarians wish to impose their will. And there is now, with the popular uprisings, a movement against such. And we're in the transition where the struggle for the vote is amazing, but I think that the popular uprising will be successful. It is an attempt by ordinary people to get control of their government out of the hands of experts who have certain ambitions. But I was pleased to hear that you mentioned that otherwise, in Canada, there is a certain amount of freedom of economies. Now, I think it can become a whole lot more when the adamant movement against energy finally runs out of ambition and is then overwhelmed by ordinary folks saying, hey, this is ridiculous. We need reasonably priced gasoline for the car. I mean, God, I filled up yesterday, and you put your credit card in, and the first number comes in is they hit you for $200. And then, of course, when you put in $100, that's all you get tabbed for. But it is amazing to go to fill up a car and you're looking at a $200 potential. Now, if you've got a bigger SUV or a pickup truck, you're getting into that. So this, and you've got in British Columbia here and in Vancouver, I think the highest gasoline prices in North America. And part of it is, of course, a large part of it is taxation, and a large part of it is this carbon tax stuff. So here you have the provincial socialist government, which has brought in some of these taxes and is supportive of as much tax as possible. They're going to have an inquiry into why gasoline prices are so high. And it's going to be an interesting inquiry. Will it be will they put people on the inquiry board that can make the right decisions, or will they blame somebody else out there? So we live in very interesting times, Jim.
Well, Bob, that inquiry has been told it can't look at taxes or government policy or pipeline capacity. Well, you know, the difference between Vancouver prices and prices anywhere else in Canada is taxes. That's the difference. Also, Stuart Muir from the Resource Works Society, I believe, told us that now in BC, because of our restrictive anti-pipeline policies and so on, we're actually using Russian oil for our gasoline because Russian tankers are now taking their loads to the west coast of the U.S.
Yeah, to the east coast as well, because I know that the anti-pipeline is not just in the Ontario and Quebec, it's also in the New England states, where they are now at Boston, say, or there, Maine and Massachusetts, getting delivery of natural gas from Russia to the east coast of the United States. When over the last 20 years, the United States has become the powerhouse in oil and natural gas reserves, and the exports are incredible. So, but at least they are building some pipeline in the U.S., but there are many places it's been held back, so that you have the absurdity of the Atlantic states getting energy delivery from Russia. And of course, you've got in the Quebec and Ontario, the heavy crude oil comes from Venezuela, which is a very corrupt and disastrous country. So the obstinacy of the left in both America and Canada is astounding. But I suggest with the popular uprising that's going on, you've had about 5 provincial elections in Canada over the last year where the change was to more practical politics regarding energy. And then, of course, you've got the federal election in Canada in October, where I'm convinced the Conservatives will win, and a whole lot of the destructive policies of the federal Liberals will be gradually eased out. So we live in very exciting times.
Bob, thank you so much for chatting with us.
Well, good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, and quite often people do, you can send them to info@howestreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.